Happy New Year! Happy 2023. Today is January 3rd. Right. It's Tuesday, back to work now. So I hope everybody have a great time during the holiday season. And now I'd just like to talk about investment and the plan for retirement. Of course, it's all about retirement and have enough money for retirement. So on a couple days ago, I checked my account from TD American Trade, and then I find out not very good for in 2022, but not too bad either. So my position of all my account down about $16,000 or 17 actually. But overall, the whole year from all the gains minus all the losses plus all the dividends is approximately about $17,000. So my year end, I would say break even, zero. It's about $200 or $300 difference. Of course, for all the gains, I realize I have to pay tax. If that's taken into consideration, that means I lost about $3,000 something, which is bad, but not as bad as the S&P 500. That's all I always use to compare my investment against the S&P 500. It's down about 19%. So today, the S&P 500 continues to go down. Mine is okay, up a little bit. My investment is sometimes is the other way of S&P, but not that much difference. Anyhow, so my experience with my investment is like I'm kind of aggressive conservative. What do I mean? I like to buy the high dividend stock or ETF. This is very aggressive because I want the dividend. Conservative is like I don't buy all the growth stock that can make me rich in a year, a couple of years, like all the high tech Tesla, Amazon of this world. That's why I say when the S&P go down that much or all the high tech go down that much, well, I'm still relatively okay because I have my dividends to cover all my losing position in my account. So yeah, so what I like to see this year is, according to a lot of retail investor or the experts, they say 2023 this year will be a big drop. It will be a crash, and this is a great opportunity to buy. Yes, it's all the information out there, and I'm not any advisor of any investment. I'm just telling my experience. If that happens, actually it's good for me myself because I still have some cash. So, but I don't know when it will gonna crash or how much it crash. That means to me, I'm still looking for all the high dividend stock. If there's opportunity, then I will, buy a little bit at a time. Actually, I bought some in December. Not some. It actually is a lot too, and it went down all in 2022 December. Was it a mistake? I'm not. I don't think so, because this is the strategy I have been planning. When it go down a little bit, I buy a little bit. I would say every single month. I still, as I say, I still have some cash. How do I know when we went all the way down to the bottom and then it will go up and up to the sky? No, I don't know. All I can do is, people say, is averaging. So if I buy a little bit when it's go, if I find a cheaper stock, and the price go down, I buy a little bit more. So actually for the past few months, like the last 6 months, my average dividends payout is 9 to 10%, which is to a lot of people is very good. To me, it's very good too. But how can I manage it? Because I always mention aggressive. I look for the high dividends. High dividend, that means there's high risk. Risk of what? Risk of they not making that much money, I mean the company, then they will not pay out that much dividend. So my rate of return is not 10% anymore. But here's the thing. I don't buy one or two or three company or stocks. In my account, I think I have like 30. A lot. How do I manage it? I don't manage it. Whatever I buy, I just put it there. Occasionally, I look at the price or whether it's go up or down. That means also I are averaging on my return. If one or two stop paying dividend, or let's say they pay less, like half, even if it's in my biggest investment, the biggest company, it will, yeah, I will get less dividend, but it will not change that much. If I say every month I get $1,000, if one or two company pay half of the dividends, I may get like $950 or $930. But if one of them say, wow, I stop paying because I'm not making money, which is no good, but it's not the end of the world. Why? If say when I buy it like $4,000, it dropped down to $3,000, very bad, dropped like 30%, and it stopped paying dividends, I will not keep that stock anymore. I will sell it and use that $3,000 to buy another stock that will pay me dividends. Yeah, I just lost $1,000, but I will continue to receive certain amounts of dividends. So my rate of return will keep between 8 to 10%. It's basically, I think I can manage it so that I can plan my retirement, plan for my expenditure, my income, like that. So it worked for me so far. Let's see what happened when it really crashed. Then it's another story. Once it's crashed, majority of my stock don't pay dividend, is another story. But then hopefully it's not the end of the world, or at least not the end of S&P 500, or for those companies that I have stock in. So yeah, I try to make this a little bit short, and this is review of my performance, my stock performance last year. But I don't go to too much detail. Probably in another one that I will do so. All right, adios.